Although I already had a minute to introduce Jean-Luc previously on the opening remarks, I think that we have some new attendees, so I'll just give another brief background. Jean-Luc is the head of Asian operations at GDA Capital. He's a lawyer, a technologist, and a futurist with tremendous experience working in family offices and innovation and business strategy. Jean-Luc is based right now in Hong Kong and previously has worked directly with some of Asia's most prominent family offices, assisting them in various capacities. Jean-Luc, I'll let you take it away and introduce your respective panelists in just a moment as we add them here as moderators.
Thank you. Thank you very much, Zach. Can everyone hear me? Is it okay? All right. Yeah, thank you very much. I'm very excited to be moderating this panel. Yeah, we're going to spend the next half an hour talking about family office investment strategies for the future. This is the title. Before I introduce you to the 5 individuals who are absolutely amazing and who would be providing great insights, just as a few words of introduction. I would say that usually we all agree that family offices are usually considered conservative. That's what we usually hear every time we speak about family offices all over the world. I live in Asia now, but before that, in France or in Europe in general, I would say the sentiment is pretty much the same. However, family offices have always and are still playing a critical role in the massive disruption that we see coming, because their primary vocation is to preserve the wealth, but also because more and more of them want to be at the forefront of the movement. So they are definitely part of, to quote Zach's presentation, they are part of the current and future exponential thinkers leveraging their capital, relationship and experiences to solve real world problems with disruptive technology. And I'm very happy and proud to say that we have today 5 of them with us. Let me introduce you to those 5 individuals. So ladies first, we have Barbara Lang. Barbara Lang is the managing partner of a company called InnoXX in Switzerland. I should call her Dr. Barbara Lang, actually. She started her career at IBM, then she moved on to consulting, and she basically specializes into providing ICO and STO advisory to clients. Since 2016, she has personally invested into crypto asset classes for a long time, and she is exceptionally well connected to family offices and ultra high net worth individuals in Switzerland, but more generally all over the world. Barbara, thank you very much for being with us today. Can you hear me?
Yes, thank you.
All right. Then we have Zachary Cerafatti. He is the CEO and founder of Dalma Capital, based out of Dubai. So Dalma Capital is a regulated entity by the Dubai Financial Services Authority. And essentially, it's a company pioneering, bridging the gap between traditional financial services and the crypto economy. That includes tokenization to traditional assets and investing in protocols. Zachary is quite a character. And one thing that I can tell you is he began his search for alpha at age 7, when he began trading bonds and equities with money that he earned as a childhood film and television actor. How cool is that? Thank you very much, Zachary, for being with us. Can you hear me?
Yes, everything's fine.
So it seems that Zachary's actually not in right now, Jill, so we're trying to get in touch with him, but just continue the introductions quickly.
Okay, all right. Okay, thank you very much. Then we have Benjamin Sigg. Benjamin is the CEO and founder of Sigg, a multifamily office with offices in Switzerland, Beijing, and Hong Kong. He is a Swiss and Swedish businessman based in Hong Kong. He is very well known for being a collector. He started his own art investment fund, and he's currently appointed as the CEO of Hong Kong Family Trust to develop their art collection, which is evaluated around 60 million euros over the next 4 years. Benjamin has been voted many times in all the lists you can think about for the most powerful person in art, being galleries, dealers, critics, collectors. But Benjamin Sigg is also obviously part of the Sigg family, who is one of the 3 main shareholders of Schindler Group, the elevators. And his uncle is widely regarded as one of the most important and influential person in Chinese contemporary art in Hong Kong. By the way, if you ever visit Hong Kong, I can only encourage you to visit the Sigg Museum in Hong Kong, which is quite remarkable. Benjamin, thank you very much for being with us. And then we have Mr. Shahal Khan, who is the chairman and CEO of Birken Holding in the US. So Shahal's career as a venture investor spans about 25 years in software, telecom, real estate, energy, etc. He's been responsible for a syndication of over $5 million in equity for projects such as the White City Ventures, where he's a chairman. He's also a partner of Global Turk Capital, which is a merchant bank based in Istanbul, and he also founded a T1 bank in Bahrain. And personally, his family background can be traced back to the Mughal nobility in the South Asia region. Thank you very much, Shahal, for being with us. And last but not least, we do have Brendan Holt-Dunn, the CEO of Holt-Dunn Family Office and the founder of the Holt FinTech Accelerator. He's based in Bahamas, Nassau. Holt-Dunn is the 5th generation family business that offers family office, wealth management, trust, corporate, conciergerie, and financial services. Interestingly, he's also a very tech-savvy investor, having made many investments in startups, and he's the founder of the Holt Accelerator, which is Canada's most active seed fintech investor. So this is just to briefly introduce you to the 5 exceptional people that we have with us today. Let's just move on to the questions. My first questions would be to the 3, I would say, the family members. So respectively, Shahal, Benjamin, and Brendan. What is the specific role of a family office in innovation when it comes to innovation? Maybe Benjamin, you can say a few words on that if you want to start.
Thank you very much, Jean-Luc, and I'd like to say thank you also to GVA for having me part of this exciting panel discussion. I'm honored to be part of this very few selected families and to give my personal perspective on a few of those topics. So I believe family offices must embrace innovation to succeed in the ever accelerating investment market of the future. So we have to adapt and have to follow the trends and innovations of today's ever-changing market. So I would say that today, more than ever, are we being challenged to find new ways to be more creative and to implement new ways on how to generate more business. I think as a family office grows, we should continue to search for new ways to drive ever higher returns. And I can tell you from being mainly based here in Hong Kong and mainland China when travel permits, that many of my family office colleagues have invested heavily towards the technological innovation in emerging industries and new startups. So in my case and overall, I believe we should try to respect the traditions, but at the same time, focus on the future trends and innovations. That is how I see our role. Back to you, Jean-Luc.
Excellent. Thank you very much. Shahal?
Yeah, thank you, everybody. Lovely to be here. Thank you, Jean-Luc. Thank you, GDA and everyone else. So when I look back at my family, I mean, I can go back, like 500 years, and there's been ups and downs in the family's history. We've had a massive amount of land, we've lost it, we've made it again, and so on and so on. So, the way that I look at it is more from an innovation perspective, where we can take the risk in order to make investments where perhaps venture capitalists, private equity, other sort of institutional-based investors won't be able to take that risk, specifically if it has an interest to do with our family geopolitically, or it's important to us where nobody else would actually invest at that time. So I think, there's a part that, has to do with wealth preservation, to hold on to whatever we have, to make sure we are not left, let's say in the next generation destitute. But there is an element of risk-taking, which if this is passionate for us, we can take risks and we can move fast, whereas other sort of investors that have shareholders won't be able to do it. They have too many people to answer to. And for us, if we decide to do it, we go ahead and do it, I think. Yeah.
All right. Thank you very much. Brendan, would you like to add something? Do we have Brendan with us?
It seems that he disconnected, Jael, so please continue. I'll try and get it back.
Okay, all right. Okay, no problem. We can always come back to that. Thank you very much. My next question is very much connected to the notion of family office and being a holder of a family name, a family history, a family legacy. I'm just curious about how that potentially changed the approach that you have with investment in general and tech investment in particular, the way you look at innovative business model. Does it change anything in the way you approach investing in the future? Same thing. So maybe this time Shahal can start, and then Benjamin and Brendan, if we manage to get.
So when I look at innovation, from the family legacy side, I mean, obviously if I look at it, my great grandfather was one of the founders of the country that became Pakistan, and then before that, my family has been predominantly in Central Asia and Southeast Asia, India, for example. And, we feel as a family a great connection to that region. We feel that we must bring technology to that region. So I was, for example, one of the first investors in solar power in India with now the current Prime Minister. I was one of the first investors in an internet company in Pakistan. I am probably at one point the largest shareholder of mining companies in Pakistan. And right now, I think the innovation in fintech will help these regions tremendously, especially tokenization, because it allows, in my mind, to bring a new economy to people and a new way of currency that is in parallel to nation state currencies, which is important to bring up the poverty base of these nations that, have not participated in the normal capital economies and are still relatively poor, and they're still doing bartering and things like this. So I think, for us now, we've invested before in internet, we've invested in telecom networks, we've invested in renewable energy. And I think now we've got to look at the future of fintech, in my view, in order to allow asset classes to move in between large populations. And for our family, and me specifically, because I'm leading all the initiatives, is really to focus in on the region where we come from and to help the populations there to carry on the legacy. Yeah.
Yeah, I know this is something very, very important for you. Brendan.
Yes, sir.
Yeah, thank you. So maybe I should actually ask you the two questions in one. What do you believe is the specific role of a family office when it comes to innovation, and how being a holder of a family name, a family history and legacy influence your approach when it comes to tech investment and innovation in general?
I appreciate that. And I do apologize if I drop off. The power's been going on and off in Bahamas. So if you lose me, apologies. I agree with what Shahal said about the fintech side. Our family's experience and expertise is in finance and fintech specifically. So, we're also, as a family office, are patient capital. So we can be very long-term oriented and long-term focused in our investments, especially on the private side. And given our expertise and therefore our network and reputation and relationship in the finance space, I think we have, our job as a family office is to be there for the tech startups, in a sense, and be able to provide the support and guidance for them at their early stages, pretty much prior to any institutional investor will come in. So we're early money in, but we, given our expertise, we're able to understand and see the value of what they're developing. And also as a multifamily office, we might see it two ways: understanding the benefit in general in the fintech space, and also we might look at it as a value add for us as a business, as a potential client. And once we see those things and we understand the business itself, where, as I said, we could be in their kind of early stage, pre-seed, seed round, and be in their patient capital, but leverage our network and our relationships to make the introductions that they need to kind of the C-level executives at banks or VC funds, et cetera, and give them the access and open the doors that they wouldn't otherwise get, or if it would take them multiple years to get those those kind of introductions. So it's the value add that we can bring to them, and leveraging our experience as a family to benefit them and help spur innovation that way. We're focused mainly on fintech because that's where we can add the most value. So that's what I'm discussing on. And the legacy itself is, my great-great-grandfather, Sir Herbert Holt, who started our family office, had a tremendous reputation, one of the most successful businessmen in Canadian history, and all in the finance space. He was the longest-serving president and chairman of the Royal Bank of Canada. So we want to make sure that we can maintain that reputation, that kind of brand that our family has, and focus on fintech and continue to drive value for technology adoption, not in our region, but really in the fintech sector itself, and be able to leverage our experience and help young entrepreneurs succeed and grow.
Thank you very much. Benjamin, maybe you can say a few words, especially in your capacity as an art entrepreneur. I know this is something that is very close to your heart, where you spend a lot of time, and where you are extremely well known in Hong Kong and in Asia in general.
Thank you. Yes. Thanks, Brandon, for your very interesting inputs as well. And I obviously only happen to be the new generation of our family of the Sigg name and what the previous generation has achieved and created. So I would say traditional old wealth families like mine are maybe a bit more conservative when it comes to our investments. Obviously, I am the new generation. My role is to kind of educate the older generations and to open them up and say to maybe they're a bit of stubborn minds and to a new approach in doing some of the business. An important role, I think, in innovation is cryptocurrencies and blockchain investments, which the old wealth would probably never really try. But the more we live in this, I'd say, disturbing world dominated by nowadays COVID and politics, we start to shift and look at more new ways how to generate money. Having all these social distancing issues and not being able to often meet face to face. Many family offices are looking to new innovations, and now probably hotter than ever before are investments with specific focus on biotechnology, which interests me and my family office very much, coming from the Swiss side. And you know, the whole world has become more healthcare orientated and focused, and with worldwide competition in developing vaccines and so on, it's definitely great opportunities on this side. Digital transformation, basically everything has shifted and starts to go digital, whether it is digital banking, online trading platforms, alternative investments. As you said, Jean-Luc, art, my passion. Whiskey, wines, real estate, buying into shares and fractional ownership of all those asset classes has become a new kind of way in investing in these ways. So in my particular focus on art, I've been working on some very interesting art project. One big focus is an investment platform offering an innovative way to select, invest in, and transact on art and art-related digital assets by basically leveraging the immense potential of the blockchain technology and crypto economics to make it simple, basically invest in fractional ownership of individual pieces of art or art collections. So I'm working on a couple interesting projects that you will hopefully hear a little bit more in the future and time to come. But on the other hand, I stick to the more traditional way of investing into art, where, as you mentioned, I'm running a couple investments for some family, multifamily offices here in Asia and in Europe, where I run a kind of private equity fund, but basically focused in investing into art. So it's a fun way and challenging one of my passion, and it's very nice to actually combine some passion with work, which I really enjoy. So yeah, that's what I do at the moment.
Thank you.
Jean-Luc, I just want to say one thing. I really echo what Benjamin said, and congratulations on what you're doing. And, you know, I love the fact that you'd be able to, you know, work on your passion, which is art. I agree with you completely where, you know, you said you're quite conservative as in general as a family office, as are we. And I think, you know, for us and maybe other family offices where they have their expertise, which for us specifically is fintech, I think that would be the only area where we are more aggressive and not conservative, because, you know, given we're able to add value and kind of leverage our experience to de-risk those investments. But if you take the rest of our other investment portfolio, definitely it's the capital preservation and conservative nature. But where our experience and expertise is where we believe we can add value and drive value is where we kind of are more aggressive. And for us, that's fintech. That includes what we're talking about today, cryptocurrencies, the adoption of digital technologies. Very bullish on that.
Yeah.
Right.
I just want to bring to your attention very quickly that Zachary has now joined. He was a few minutes late. So he's now, and you have 10 minutes extra on the panel here. So hopefully the panelists can stay, because I'm very much enjoying the discussion. So keep going.
All right. Right on time to move to the two other individuals that we have. So Barbara and Zachary. I would like to touch on a specific point when it comes to family offices in general. There is one thing that you know I've been hearing for years now, and apparently it's happening right now. It's the notion of generational wealth transfer. Apparently, according to research, we are about to witness the biggest generational wealth transfer ever, estimated by Bloomberg at around $68 trillion from baby boomers to heirs over the next 2 decades. So my question to Barbara and Zachary is: do you believe this movement of wealth transfer, which is absolutely massive, do you believe this is going to impact the way family offices invest in the future, in their future, but in the future in general? And how is that going to impact the traditional distribution between cash, equity, bond, real estate that is the usual classic distribution that we see with family offices in general? I would like to hear your thought about that. Maybe Barbara.
Sure, thank you. Well, I can tell you here in Switzerland, the investment decisions are run by investment committees that are hired by the families. And then they present to the family the ideas. Now, 2020 has been an especially interesting year in that a lot of changes have happened and even bigger ones are still coming. If you just look at the IMF website, where they said we need a new Bretton Woods moment. If that doesn't make you nervous, I don't know what does. Most people who sit on a lot of money are more nervous about the Bretton Woods statement than about the COVID. So we work with institutional investors. Obviously, here in Switzerland, we are in negative interest territory. Many funds are moving into cash and pay negative interest to be in cash. So the question is, where is safety in a world like 2020? I think 2020 redefined safety for all of us. Things like commercial real estate used to be really hot until last year and considered really safe, and pension funds used to invest in commercial real estate. This year you can get commercial real estate for pennies on the dollar. So there is a lot of rethinking and a lot of nervousness. And of course, all the investment committees that we work with have everything in writing, so that if bad things happen, they don't get nervous. They stick to the policies they have written out. And many of them have a diversification strategy, which includes alternative assets. And I love what Candice said in her slide. If you break a monopoly, you must offer something better. What we do is we provide these family offices with a pipeline of interesting companies in healthcare. We have stuff like gluten sensitivity, even vaccines that are very safe, because obviously we're now considering vaccines something that may not be so safe as we probably did last year. And we also provide a pipeline of new technology, especially in the blockchain space. But all of the things that we offer are industrial in scale. So you don't invest in a little startup. So that's our service for them. And we find that family offices this year have been very, very nervous. Also about equity investments where they are in companies, where they realize things do in a COVID world do not go as well as they had planned according to the business plan, you know.
All right, thank you very much, Zachary. In your capacity at Dalma Capital, at the cross between traditional finance and crypto economics, how do you see that?
Yeah, I mean, so at Dalma Capital, we're in both conventional and digital assets. We have private equity funds, we have logistics funds, we have private credit funds. We also have crypto funds that are doing arbitrage, that were participating in ICOs in 2017. We were, the first investment bank to issue digital securities alongside BTG Pactual. And our client book is a combination of family offices and institutional investors. On the topic of the discussion, this kind of intergenerational wealth transfer that is occurring at a time, as has been highlighted, when interest rates are and will remain very low, if not effectively negative, and that requires investors that want to preserve intergenerational wealth in real terms to invest in asset classes that are further up the risk spectrum. This pushes investors to consider increasing alternative investments, which is currently sitting at around $10 trillion of assets. We expect by 2023 this to grow to $14 to $15 trillion of assets, and for family offices to be the most important source of new capital for alternative investments in general. We talk about alternatives, we're talking about hedge funds, private equity, venture capital, some segments of real estate, and natural resources, and a few others. We again consider crypto, digital assets, typically and principally to fall under the alternative investment space. Some of that's being done in venture, some of that's being done in hedge funds. But the purpose of alternative investments is to try to generate alpha, right, for clients, to try to find an excess risk-adjusted return above what can be generated by a passive portfolio. And again, what a passive portfolio, the benchmark for what a passive portfolio can generate is, decreasing year after year. So alternatives are increasingly attractive relative to other asset classes, and are an increasingly important component of the family office portfolio. Highlighting again, I think far too many family offices try to invest directly and pick winners and losers in private companies. I think what Brendan highlighted is critical. That if you are going to make direct investments, stick to things that stick to industries that are similar to the family business. If the family business is in agriculture, think about agri-tech investments. If the family business is in shipping, if you're going to make private direct investments, do it in something that don't try to pick the next ICO, the next crypto startup. Trust the professionals to do that for you. There are plenty of funds that are very happy to manage your money for you. And I can tell you that the days of 2 and 20 are pretty much over. So you can fight for probably 1.5, 1.6, and 15, 16, 17 for most managers, and get that, as long as you're happy to write decent check sizes to come in. If you do want to have direct investments, what I also recommend is find a fund manager that has a theme that you like, and sign into the fund with a co-investment right. They'll give you access to deal flow. If you like Chinese tech companies, go find the best Chinese tech fund. I can give you a list of a few. Come in for a ticket in their fund and negotiate a co-investment right. Then they will be serving you deal flow. They will be giving you deals, and you'll have the right to co-invest in those companies directly, rather than trying to, because it is work, it is brain damage. You have to look at a lot of companies. You have to do a lot of analysis. If you're investing alongside, an ex-Tiger fund or someone along those lines, you can feel a lot more confident. So that would be my recommendation for family offices that are considering how best to deploy capital in the alternative landscape, and principally looking at some of the topics that were discussed here: tech, blockchain, crypto, next kind of era. Obviously, I think it's a broad topic, but I'll finish on it. Is ESG is critical. Investing in a positive impact portfolio. This is, the energy transition is underway. If you're a family office and you do not have exposure to funds that are participating in the energy transition, then you need to. You're behind. This is, we are seeing the third energy transition, take place underway, and it really is just getting started. There is a $2.5 trillion a year funding gap. And you're not missing out on returns. It is a very alpha generative. If you look at ESG funds in Europe, they outperform the benchmark by, I think, north of 3%, risk adjusted. In North America, it's around 2.5. So, and that is, risk adjusted alpha that you're getting just by getting exposure to this space. So that would be kind of my final recommendation, is if you're not in an ESG focused fund or portfolio and are not focusing your new allocations on that, today's the day to start.
Yeah, I could not agree more. In Hong Kong, Singapore, or even all around Asia and probably around the world, ESG is definitely a super hot topic, and it's just keeps growing. Actually, I think probably we will probably dedicate maybe not the next one, but an entire edition of one of our series of conference to ESG. I believe it's a topic in itself. Thank you very much. That was extremely insightful. Last question. I don't know exactly where I am on.
Just on timing, Jay. I'll keep the question short. The responses short from the panelists.
Okay. All right. Thank you. Last question that I would have. It's more a prospective question. I mean, we can't really avoid it. We are living particular times. We are in a COVID world. I can't even call it a post-COVID world, because I believe we are still in it. My question would be: do you believe this will trigger new strategies or maybe some increased attention to new business models based on technologies? And how do you see the world emerging into, getting out of the COVID sanitary crisis, hopefully for the better? That would be great to have 1 minute from each of you on this topic. Again, ladies first. Maybe Barbara.
Yeah, 2020 showed us that predictions really are not worth the paper they're written on, because definitely our world has changed dramatically, and I think we're not finished changing. I think a lot of the changes are still coming down. Many family offices that I know, that I work with, prepare by being as diversified as they can, and of course there's also a lot of safety in rare metals, in silver and gold, of course, here in Switzerland, and then wait it out and wait until spring 2021.
Thank you very much, Barbara. Thank you. Benjamin?
Yeah, I couldn't agree any more with Barbara. 2020's been challenging. I think the healthcare sector, as well as anything digital, will benefit from what we're going through right now and in the future. Overall, a lot of good things have come out of it. The many challenges that we face today, and the more difficult times we go through, the more innovation we need to tackle this. So we all have to be on our toes not to miss the trend. I see a lot of great opportunities, at the same time competition, but I think with the right strategy and right partnerships and momentum, I believe there will be great things coming out from all of this. That is my personal opinion and conclusion. Thank you.
All right. Thank you. Brendan?
Yeah, I agree. There's going to be winners and losers. As Barbara said, commercial real estate has not done well. I'd be really curious pick Benjamin's brain in the future about what's going on in the art world. But I agree with everyone said. I think digital adoption or anything focused on digital adoption is going to succeed. You know, what we know is fintech, and there's been a real big focus and resurgence on fintech. We've had 3 of our portfolio companies raise more than $40 million in less than 2 months in the middle of COVID, 2 of which were unsolicited term sheets. So there's huge demand and a focus on digital technology in the financial space. So that's definitely a winner going forwards.
Thank you very much. Shahal?
Yeah, so I'm investing in 2 things. One is contrarian, which is investing in hotels and hospitality right now, picking up iconic assets at discounted prices and putting them on the blockchain and launching an STO token. One of the partners that we have is going to be one of your other panels, and we're going to be launching one of the first cryptocurrencies, STOs backed on hospitality. So buying low and then spreading, let's say, the sort of fractal investment, because now's a time where, I believe as a contrarian investor, real estate will always come back. And this is one time that we could buy it at a pretty low price in major cities. So we're investing heavily, a few $1 billion in that. And then secondly, rare earths, gold. We have a lot of my own mining leases in Central Asia that have a significant amount of rare earths, which Europe and the United States need, obviously going forward. But we're looking to finance them in an alternative manner through securitization and using blockchain and STOs to do that in combination with our own dollar equity. So those are the 2 things we're focused on.
Fantastic. Thank you very much. I believe, unfortunately, Zachary had to leave, so I will not ask him the same question. But anyway, thank you very much, guys. That was absolutely interesting. This is the end of this panel. It was too short. It's always the frustration with such an exercise, but trust us, it was just the beginning of. It is just the beginning of a global conversation we want to initiate on this global platform. Many more to come. Thank you very much for your participation. I believe we are right on time for the rest of the event. So, Zach, back to you.